Hi, my name's Leon Rowe, currency trader and trading coach at trading180.com, and welcome to this video on the FOMC announcement today, right? The all-important hike that is coming within the next 10 hours, 4 minutes and 5 seconds, right? So if you're trading the FOMC rate hike, this is something that you need to be aware of, right? So this page is the from the CME group. I'll leave a link in the description box below, and it's always good to kind of keep an eye on this. And what this is basically telling you is the probabilities of a Fed rate hike depending on when they are going to announce their dates, dates of their meetings, right? So you've got at the moment, and this can go up and down, by the way, this does go up and down. 1st of August 18 probabilities of them no changes, 4.8 hike, 5.2, etc. etc. So no change, 98, right? But getting back to today, right? So pretty much everyone knows that the chances of a Fed rate hike are 95%. You don't necessarily want to go against that, even though if it does, if they don't hike today, you should, or this is not financial advice, but that sell button needs to be very considered very highly, right? Selling the dollar, that is, right? Because that will basically catch the market offside, because there's such thing as, I suppose, buy the rumor, sell the fact, but there is also the market prices in, it's pricing in a rate hike and where it thinks the value of the dollar will be when the actual hike comes. So, as the market, has been going up, the dollar's been strengthening. It's because the market has expected a rate hike, and it's now, the dollar is now at a price where the hike is priced in. So if you do get a rate hike, I'm not necessarily expecting, explosions or anything like that, because I'm expecting the market to have priced in that the hike. And a lot of traders fundamentally, let's say fundamentally, but I suppose their limited understanding of fundamentals is, rate hike up, rate cut down. And it doesn't always work like that, and because the market is pricing in the rate hike, and one of the reasons for this, right, is that there's always something beyond what everybody expects, right? Not everyone's going to make money in the market. So if you don't know about the dot plots, this is what you need to be aware of. This is what is going to be in focus, right? And this is a Bloomberg article. So Fed dot plot, Fed's dots in focus as market awaits rate hike decision day guide, right? And what are dot plots? Dot plots are pretty much the Federal Reserve's committee's projections on how many hikes they're expecting to achieve this year or in the future, right? So I'll just read a couple of paragraphs here and there. So Federal Reserve Jerome Powell repeatedly played down the central bank's dot plot guide as a guide to future interest rates, but Wall Street just won't take the hint. So while the Federal Reserve Open Committee is almost certain to raise rates a quarter point at the close of a two-day meeting Wednesday, investors are focused on whether the panel will signal one or two additional 2018 hikes when it releases updated interest rate forecasts with the policy decision at 2 p.m. Right? Powell will begin his press conference 30 minutes later. So what traders are going to do when the FOMC minutes are released, right? Traders are going to basically be looking at that statement to see whether it is going to be potentially 2 or 1, right? And the Federal Reserve may not come out, in that meeting, it might not come out as in, we're going to do 2 and we're going to do 1. It's literally going to be written in a certain language. There's a certain tone, is what we call hawkish and dovish, right? And if it's a hawkish tone, right, they're implying that there's going to be 2 interest rate hikes this year, and that will be positive for the dollar. So you could then see the investors start to price in a second rate hike, hence prices go up, right? Because what investors are trying to do is buy low, right? And if there isn't a chance of a hike, then what's the point in buying the dollar? Because it's already, price of the dollar has already been priced in, right? If there's only going to be one, right? So 2 interest rate hikes, then investors are trying to project the value of the dollar with potentially 2 rate hikes. So this year, so obviously the dollar is undervalued at the moment. If it does come out that they are going to raise rates twice this year, and if only once, then they're going to reevaluate their the dollar's value, right? So it's all about the decision, right? And the dot plot decision, not the actual rate decision as far as what it comes out, because it's pretty much a foregone conclusion, but it is more about the future, right? And so anyone who says, oh, fundamentals don't matter, fundamentals do matter. It's just that the obvious fundamentals, when it's right in your face and everyone knows about, rate hikes, there's always something behind that. There's always deeper there's always something behind that's going on the scenes, right? Something that you should be really focusing on, and what other investors are focused on. Doesn't mean that fundamentals do not work, right? They definitely do, because that's how we derive really value and potential value from a currency, right? Not through technicals. So hope that helps. Again, my advice, not financial, and what I'm doing is just gonna wait for the reaction. I'm already in some dollar trades anyway, but I'm just gonna wait for the reaction before adding to any positions, or even taking off positions and maybe taking some profit. So wait for the market to react. If you have to even wait half an hour, 40 minutes, don't worry, it's fine, because the market could be chopping you out in the first 5, 10, 15 minutes, etc. Just take care out there. Don't risk too much. Risk maybe 0.1, 0.2%, as small as you can, and then you can always add in. There's always a chance to add in. Don't try and hit a hat trick in your first game, kind of thing, even though we all like to, but and if it happens, then great, but just risk is the key. Managing your risk, and then let the profits take care of themselves. So have a great day, and I will speak to you guys soon.